Good afternoon, Mario. I trust that you are well. As I mentioned to you, we were too late to get in on Britannic Opportunities Limited, but I did inquire from Investec what secondary market stock is available for sale. And they've come back to me and they've given me an analysis of their top picks of the shares that is available. I had a look at it. Asia Pacific is currently the best one to consider. So what I would like to do is just to quickly refresh your memory in terms of how does this all work. So you would recall there are 7 Guernsey Incorporated Bermuda listed companies, and you are invested in East Asian Growth Basket. So Britannic is the one that have just closed now, and Asia Pacific, in my opinion, is the best one that Maro can consider. So let's just quickly have a look at what does East Asia look like versus what does Asia Pacific look like. Very, very similar. You have an 45% exposure to the S&P 500, a 20% exposure to the Euro Stoxx 50, a 20% exposure to the Nikkei 225, and a 15% exposure to the MSCI emerging markets. So Asia Pacific is almost exactly the same. The difference is they've dropped this exposure by 5% to 40% exposure to the S&P 500. They've increased the exposure to the top 50 companies listed in Europe from 20 to 30%. They've cut down the exposure to the top 225 companies listed in Japan from 20 to 15%, and they've kept that one exactly the same. So if we look at Asia Pacific, there are the revised weightings: 40%, 30%, 15, and 15. You would recall you have a 200% participation factor to these markets between 5 and let's just calculate, it's a cap of 58.2 divided by 2. So between 29.1, between 5 and 29.1, you get 200% participation. In other words, the maximum that you can get is 29.1 times 2 is 58.2 plus the guaranteed 5, which gives you the 163. So for you to get the 163, these markets must basically do 29% here, and then you will receive the 63% there. So from a gearing perspective and a probability perspective, very nice investment to have as you get a geared upside on markets. Your capital was 100% protected and you took credit risk on Investec Bank Limited. So Asia Pacific works exactly the same from a credit risk point of view. Your exposure is also to Investec Bank Limited. A slightly different option provider. UBS provided the option here. Asia Pacific traded 6 months after East Asia. You'll see the initial spot date here was the December 2017. East Asia traded 6 months prior to that at June 2017. So Asia Pacific traded at a slightly higher participation, but a slightly less total return. The total return was here, the maximum that one can get is 159% over 5 years. Yours was 163%. But this one traded at a higher gearing factor, meaning that for you to get the 55, 55 divided by 2.4, the markets only have to do 22.91 in order to get the 55. Now, this investment has been running for 2 years, so we have to do a revised calc to see, what Maro can expect from this as a potential upside. If we look at that, and we look at the IRR of the investment of 1632. This is now your East Asia investment. If you've put in 1,000, this is just ignore the rands. If you put in $1,000, the maximum that you could have got was $1,632 over 5 years. In other words, a compound interest or internal rate of return of 10.29% net of taxes, net of fees in dollars is the maximum that you can get from East Asia. If we look at Mauro's scenario, for every $1,000 that he invests, and because there's only a 3.5-year term left, not a 5-year term, and he can get $1,543, once again, just ignore the rands there, the maximum that he can get from this investment on a compound interest point of view is 13.13% per annum. So if we look at Investec's summary, and you'll see they've did this on all the shares that are available. There is some shares in East Asia available as well, but currently that's not the best buy, as one has to look by how much is the index up and what is the negative or potential loss versus the potential upside. You will see in East Asia, because the market is 10.45% up already, one stands the chance to lose between 3.5% and 4.4% of your capital if you invest now. But if you look at Asia Pacific, it's only up 1% since inception, and you don't stand a chance to lose any of your capital regardless of what happens to the underlying market. So if the underlying market moves -5, -10, -15, -20, -25, you will not lose anything, as you will still get a positive 0.82% return. Looking at positive return scenarios to expiry, if markets increase 5, 10, 15, 20, up to 40%, the blue figure here is what Mauro can expect to achieve, and the 54.36% over a 3.5-year period equates to a 13.13% IRR. So yeah, best to look at this page as a summary, and there is about 38 million rands worth of stock available. So from that perspective, definitely enough stock. Asia Pacific is $109 million in size, so roughly about 1.5 billion rand in size. So it's a very big company. And yeah, if we look at the fun fact sheet, they've just highlighted there in yellow, purple, and blue. The figures that they've highlighted here for you as well in yellow, blue, and purple, just so that you know where on the fun fact sheet they are referring to in this summary. So I will forward this on to you. Please have a look at page 205, and I'll also include this fact sheet for you. And then I'll give you a call to discuss. I would appreciate if you can forward it on tomorrow. If he's got any questions, he's more than welcome to contact me. I'm happy to explain it to him in detail over the phone. As far as EU regulations are concerned, I would just have to draft a letter that he would have to sign that states that he did learn from this investment from you being an existing client of mine, and that the Guernsey company itself didn't market this investment to him. So yeah, I'll give you a ring to discuss. Have a good weekend. Ciao.